The R&D tax credit can seem technical and complicated, which can make it hard for businesses to visualize their savings. But don't be fooled by the convoluted jargon of the tax code. In reality, the R&D tax credit is a relatively straightforward money saver, and it may be easier to use than you think. Here are 5 ways a company can use the R&D tax credit. Number 1. Receive approximately 5 to 10 cents for every dollar in qualified expenses. The R&D tax credit is typically worth 5 to 10 cents on each dollar of qualified expenses. If you spent $100,000 on research and development, your tax credit would typically range from $5,000 to $10,000 depending on your specific circumstances. If you outsourced some of the expenses, you can usually claim a credit on 65% of contracted research costs and 75% of payments to a qualified research institution. For instance, if you had $100,000 in contract research expenses and a 7% R&D credit rate, your credit would be $4,550. Second, use any unused portions of the credit in future years. If your credit is greater than your income tax due, the credit isn't refundable, but you still may be able to use the remaining portion. All businesses can carry forward the unused portion of the credit for up to 20 years. This allows you to use the credit to pay future taxes in the same way you would have used it to pay current year taxes. Number 3. Use the credit towards payroll taxes as an eligible small business. Eligible small businesses with less than $5 million in gross receipts and less than 5 years old can use the R&D tax credit to reduce payroll taxes until you reach the $500,000 annual limit. Apply the credit when filing taxes, offsetting Social Security and Medicare taxes quarterly until reaching the limit. Number 4. Use the credit towards AMT as an eligible small business. As a general rule, the R&D tax credit can't be used against alternative minimum tax, or AMT, but there is an exception for eligible small businesses. For the purpose of being able to use the R&D tax credit against alternative minimum tax, an eligible small business must be privately held and have less than $50 million in average annual gross receipts over the previous 3 years. If you qualify, the credit would apply against your minimum tax liability as it would against regular income tax liability. Note that corporations are no longer subject to alternative minimum tax. Lastly, go back and claim credits you missed in previous years. If you had qualifying research and development activities in the past but failed to pursue the credit, you may still be able to take it. You can go back and amend your income tax return to include the R&D tax credit. This would allow you to receive a refund for the amount of the tax credit and/or to carry forward any amount of the credit over your income tax liability for that year. You generally have 3 years to amend an income tax return. If a company is considering amending its tax return to claim the R&D tax credit, it should know about the updated rules from the IRS. These rules make it more complicated with new filing procedures and documentation requirements. The truth is that R&D tax credit may be easier to use than you think, and it's a valuable financial tool that can greatly benefit your business. If you enjoyed this video and found it helpful, don't forget to give it a thumbs up, and for more valuable content like this, be sure to subscribe and ring the notification bell so you never miss a video.